Content is intended to provide accurate information, however, is not intended as financial, tax, or legal advice. Please consult a financial, legal, or tax professional for specific information regarding your individual situation. Opinions expressed and provided are for general informational purposes only and should not be considered a solicitation for the purchase or sale of any security.
Welcome to Game Plan for Retirement, presented by Chris McIntire, Northwest Ohio's retirement planning resource.
And welcome into the program. This is your Game Plan for Retirement, talking dollars and cents with our favorite resource and source for common sense, Chris McIntire, president and founder of McIntire Retirement Services, Northwestern Ohio, your resource for financial investment and retirement planning. And Chris, we appreciate the time as always. I feel like some people like to dive in and really get into the details of their financial situation. And then other people, it's like, that's the furthest thing from what they want to do, complete opposite. And just trying to even figure out where somebody is in that spectrum might be a difficult task in and of itself for you.
Yeah, that's a great point you bring up there, buddy. And we deal with so many different folks, and it's, you have to have the flexibility of somebody that's not used to talking about money to somebody that could tell you the top 10 ETFs going on. That could be one appointment to the next, and and having some flexibility and and recognizing where you need to address and how you approach people. Because sometimes people, if they're confused about something, they just mentally shut it off. And, and so you got to be able to recognize facial expressions. And those are things you can't get if you have a robo advisor or a headset advisor. They can't read facial expressions and say, you know what, it looks like you're a little confused here. Do you want me to back up and kind of revisit this again?
Yeah. Sponge can only soak up so much water, right?
Exactly. And I tell a lot of folks, look, after about an hour, if it's somebody that's not a current client and we're looking in, and diving into the weeds, so to speak, you and I deal in technicalities. A lot of other people do not deal in technicalities. So you have to sometimes say, look, we've been talking about this for 45 minutes or so. Why don't we shut it down now? And why don't we pick up here the next time we get together, and we'll work our way forward? Because let's be honest, folks, we're talking about, some life savings that people have worked 30, 40 years to put together, or in a lot of cases, it could be a divorce situation where, you got a lot of emotional elements involved. You got health considerations. Somebody just got a diagnosis of, something pretty serious. And, we've dealt with a lot of clients that have passed away here recently. And so, helping people who have not managed the money before, but the spouse that passed away did. And it's like, look, how do you work into that transition at 87 years old, for an example?
Mm-hmm. And it is a very technical profession. You've got to be proficient in the technical aspects of what each and every investment option and element does. But behind the technical part of it and the math of money, there is the emotional factor, which ultimately, Chris, ends up probably driving as much, if not more, of the decision-making process in many cases.
Yeah. Especially when the market goes down, more so than when it goes up. When it goes down, everybody's like, look, what's going on? We're going into a recession. I want to get more defensive. And that's probably been, the bulk of the talk with the folks that we help out, or even new people coming in is, I'm fearful of a recession. How do I protect myself? For some people, they just, lose faith in the market, and, whether that's politically driven, whether that's, from past historical things that have happened to them, unrelated to politics. If you look at 2001, 2002, the market really crashed pretty good, and we could lump in the year 2000 there. We had 2008, a major financial crisis that almost took down the global financial system, and then we had, 2011, August was a pretty rough one. I think that was when Greece was getting ready to default. The U.S. debt got downgraded. That was a crazy month in August. I remember being on vacation with my buddy Dave, as you know, Dave, and we're sitting out there on vacation, and all of a sudden, the U.S. debt gets downgraded, and just, when you're in this world, folks, it's just funny. Things happen at the worst time. Always when you're on vacation, the market decides to take a hit. I'll leave it at that, just so we can put this out on the radio, public airways, and have a laugh with it.
But Chris, even if we were the best market timer ever and stayed on top of things constantly, there are events that you can't do anything about. After 9/11, I remember that the markets and Wall Street shut down for a number of weeks. So there was no active means to react to that event. Whatever we had in the market and invested the day before is what remained in place for a significant period of time.
Yeah. And, and that was an infrastructure piece, right? The planes crashed in the World Trade Center. They had to turn the power off to Wall Street, and that's kind of what kept it closed for a few days. And, I got an email here just recently from a client, said about the same thing. Look, what happens if, China shuts down our power grid, was kind of the
you have to worry about all kinds of issues.
Yeah, exactly. And, but how do you live your life for something that may happen and is probably a pretty good chance it won't, And, there's so much of that going on with the news and whatnot. And, I was thinking to myself this morning as I was, had my quiet time this morning, is that, a lot of times, depending on where you get your information, is they want you to think a certain way, So, I don't know that we have the journalism that we once did. We have a lot more editorialism, regardless if you lean to the right or lean to the left, that, you're getting fed information that they want you to think a certain way. And, I'd rather kind of think right down the middle and make my own opinions, and, that
report the news and let you decide is how it used to be. But Chris, I mean, we've been doing this program together for a number of years, and my background has been in radio for more than 2 decades. I remember getting the feeds of what news stories would be repeated or broadcast for the next hour's updates, and you get them every half hour. But not only did our stations get them, stations all over the country got the same stories. That's how it worked if you were within a particular network. And so several years ago, much more recently, I saw the highlight reel where one news station broadcast a specific message, and then you heard it repeated and parroted and echoed all over again, same exact phrasing. And I was like, yep, that's exactly what happens when every news source seems to get their information and told what to report from a single source.
Yep. Yeah, no question about it. And especially unnamed sources, right?
Mm-hmm. Mm-hmm. Yep. So, Chris, we are here to present information and let people decide for themselves what is right for them. And ladies and gentlemen, keeping it at a high level here on the program for all listeners to benefit from the information and education about your money. Chris McIntire, the team from McIntire Retirement Services, strongly believe that everybody's got the ability to make good decisions with their money, given good information, and that is their mission. So if you've got questions that are specific to your situation, if you'd like to dive deeper into any topic that you hear on the program, you are always welcome to be in touch. Give McIntire Retirement Services a call at 800-868-1194. That is 800-868-1194, 800-868-1194. You can also go online, McIntyreRetirementServices.com, McIntyreRetirementServices.com. 4 offices conveniently located across Northwestern Ohio. You are always welcome to set up a time to meet in person and speak individually about your situation, or attend one of Chris's many educational classes that he teaches in college campuses throughout the area. So lots of ways for you to get information, and informed people make better decisions when it comes to most everything, and especially with your money. So that's the mission there at McIntyre Retirement Services. Give a call. And if you'd like to get your specific written plan put together, that's the added bonus and the real value, that you've got a team of experienced, qualified experts professionals to help you craft that plan, who have the experience of knowing what has worked and what has not worked in other circumstances, and helping you benefit by avoiding what has not and implementing what has worked. So give a call again, 800-868-1194. That's 800-868-1194. So Chris, first part of the program talked a little bit historical, things that have happened. Now looking forward, we know that there is a need to replace and create income when we retire. And it's sort of the question, the paramount issue in our financial planning. How much do we need in order to do that? When can I retire? How much do I need in order to retire? That is one of the chief questions that you help your clients answer there at McIntire Retirement Services.
Yeah, buddy. And I'll tell you, the usual response to that is, well, how much do you need to live on? People say, when can I retire? Well, how much do you need to live on? And if they don't know that answer yet, that's the first one we got to work on, because it doesn't matter how big your 401k is. If you don't know how much money it needs to generate, that's where we want to start, kind of that step one process there. And, we got a client, kind of a long-term client, and he was in just the other day, and, had done very well for himself, very well diversified, got some farm ground, got assets, but, it's going to get a union pension and then 2 other pensions from places he's worked in the past, and Social Security. And, was fortunate enough, he said, I'm going to make just as much money in retirement as I am working. I'm just working now because I'm just trying to pad everything here. And, he's got a nice job. And, it's like, buddy, you are a rare breed there, because the bulk of people, the folks that are listening to the radio show right now or watching on the podcast, and forgive me, I had to come in a t-shirt today if you're watching on the podcast, just the way it worked out today. Sorry about that.
You're looking
guys.
Great, Chris. No problem. Your outfit's not judged much on the radio. And
Yep. We
video,
did
we want to be
this one
comfortable
on.
anyway.
Yeah, this one's not live on a Monday morning by any stretch here, guys. So catching me on a Friday.
But Chris, plus, I think that if, like your friend there, somebody in that situation who can say, I've got the same income when I retire, probably shows up to work with a little less stress on their shoulders, probably maybe a little bit more enjoyable time at work, knowing that that is the situation that awaits us in retirement, right?
You're absolutely right, because he could retire right now and not miss a beat. He just happens to like what he does and needs to fill the time, it keeps him sharp, of course, but really likes what he does. And he even said, hey, when I go to retire, my union and the place where I have been working for the union have said, we'll hire you as a consultant, so heck, he could, he's got just a nice place to be. And
retire and go back to work.
No kidding, and so, but what we look at in regular, normal America is, trying to figure out, look, how do we work all of these pieces to your puzzle? Do you have a pension? Okay. Which option do you select? And, if you're married, how much of that pension benefit do we need to leave to a potentially surviving spouse? And then what year does it make sense to take your Social Security benefit? Do we need to cover some additional healthcare costs before you get on Medicare, if you go early, for example? And then, what's the size of the portfolio that we can generate the income from? And, I think we probably have a pretty good niche in that marketplace on, utilizing dividends and interest and structured notes, some unique features that are out there, covered call options, to help generate income versus what's the bank offering in a CD? Do I plop down my nest egg at the bank and just live off of the interest, as an example? A lot of other ways to diversify, looking at real estate and whatnot. And, a lot of people think, well, I don't always trust the stock market. And, hey, we totally understand that, because if you're investing in growth companies, they might not pay dividends, where if you're investing in companies that pay dividends, their stock's going to dip. But if you're picking good, healthy companies that you have a track record, you can see how their dividend rates have paid out. That can also, alleviate some of the concern of the volatility of market pricing, where dividends Yeah,
all
the
of those
reliability of
options.
those dividends. Sorry, buddy.
No problem. The dividend's a very valuable part of potentially an income producing portfolio. But Chris, you hit on it, that question of how much income do you need if somebody's recommending products or strategies to implement or invest in without first answering and addressing that question. Do you think that is potentially problematic?
Yeah. There are certainly a lot of possible, outcomes that may be undesirable in what we deal with. And, life is what happens to plans, we say, Peter. And so, if you have the more solid your plan is, that's probably going to include a plan B. So if something happens to plan A, you've got a default method. And, for those of you that have read the Wall Street Journal today, more recently here, they got, if you get it online, you can kind of see the same articles, but they said, a lot of companies doing business with China right now are looking at a plan A, a plan B, a plan C, and a plan D, just in case, some sort of conflict may break out, because it certainly seems the rhetoric is ratcheting up. Let's hope it ratchets itself back down for the good of us all.
And again, Chris, you've got so much you've got to worry about in your world on your shoulders. And some people like to dig into those details. Some people would rather ignore them. You're there to help serve and craft and create the plan for the spectrum in between and including. So again, ladies and gentlemen, if you've got questions or concerns, just pick up the phone, give McIntire Retirement Services and Chris McIntire a call. 800-868-1194. That's 800-868-1194. 800-868-1194. Chris, do you feel like this conversation about how much income do you need and the process of planning to generate income is missed so often, and during the majority of the course of people's financial lives, because that question is already answered by the paycheck? So for decades, we don't really need to answer that question, right?
Yeah, you're exactly right, because people spent what they made, essentially, plus the and the 401k savings was automatic. I never saw it coming, so now all of a sudden they were in autopilot, and now all of a sudden you need to go into, hey, we're navigating a retirement course of action. I don't want to call it a storm, because it's not necessarily a storm. And I would say that the income piece of it right now, Peter, inflation is starting to find all those holes in plans that were out there before, because, let's look at the cost of everything. My God, look what a car costs right now, compared to what it cost 10 years ago. I mean, it's just ridiculous what we pay for vehicles these days, for those of us that remember the 70s, and Peter isn't one of those.
No, missed it by this much, Chris. 1980. Yeah. So remember some great times. Remember some hard times too. I mean, I remember having conversations or hearing conversations with my parents where their mortgage interest rate was up at 12 or 14, high double digits, not quite 20%, but in the mid to upper teens. Interest rates have come up significantly over the course of the last 18 months or so, but still a far cry from those kind of historic rates.
Yeah, you got that right. And, I remember pretty well also in, right, what we're struggling with right now on the economic side of things is inflation is hanging in there, in that let's call it 4.25, 4.5 range, if you will. And trying to get it back there to 2% is the Federal Reserve has got to say, okay, well, how much higher do we go before we cause damage that we might not have had to? So it sounds like they may pause the interest rates here for maybe a month, let's call it June, maybe even July, and see what has happened with all the rate hikes they've had previously. What have we had, 10 in a row? So it's like, a lot of the opinions, I guess, is, look, stop raising them and let's see if the damage that they've inflicted, okay, and demand destruction, that's what I meant to say, is that going to continue on here, and we might get down to 3% inflation instead of, let's wait until it happens and then we'll react to it. So, we're kind of walking that fine line. Good jobs reports, right, have just come out recently here as well, and which, that could certainly lead to higher rates going forward, which means, more demand destruction could be coming. And, and I just glad that we don't have to make those decisions, because it's hard to be right 100% of the time, for sure. And remember, the Federal Reserve said inflation was transitory. It was going to go away, and they missed that big time. And now they are overreacting, or could potentially be overreacting to that statement, to that miscue, if you will.
And just in the nick of time, crisis averted once again with a debt and spending deal. So thank goodness for those smart pillars of industry and capitalism up there in Washington, who could get that deal done just in time to avoid and avert crisis for us all. I'm a little tongue in cheek if you're picking up on the sarcasm there.
I was going to say crisis delayed, not, yeah.
Indeed. And Chris, yet again, we've got to factor all of these things into planning for our financial future when we walk away from the paycheck, looking at inflation, looking at taxation, looking at market risk, looking at the potential for healthcare cost, how to maximize Social Security. Well, what if there are issues with that down the road? You're putting all of these together in written plans. You're addressing these issues in the planning process so that we can feel more confident in life. And I think that's the true benefit of the game plan for retirement plan, to identify and address potential problems, issues, variables, and identify opportunities to address them in that planning process, and then talking through how to execute on these items. Ladies and gentlemen, if you'd like to look at that game plan for retirement written plan, pick up the phone, give Chris McIntire a call, 800-868-1194. That's 800-868-1194, 800-868-1194. And Chris, I think probably the answer to this I know, but deal with more risk adverse investors right now. I mean, everybody's risk tolerance is very high when the market's moving up, right? But the true test of your risk tolerance is when the market goes down. Are you hearing from more people concerned about that after 2022 and even including the little bit of rebound we've had here in 2023, which has been nice?
Yeah, it certainly has. And yeah, most of them have really been much more, concerned about, where the market is going or the economy in general, and even the direction of the country. Probably, let's be honest, there's some, we're in that, I think, a phase here where, the next election cycle is going to be pretty, a very important one at that. And, we're seeing that play out right now with some of the political candidates that are out there. And I'll throw a personal opinion in here, is I haven't changed anything, because, when you live in this world, we understand that, if you like dividend paying stocks and as we're recording this today, dividend stocks did very well in 2022, and they're, not performing as well as growth stocks here into 2023. That's a fair statement. Okay. But all those reinvested dividends, okay, I'm reinvesting those dividends. I'm buying stocks while they're down in value. Those returns come down the road. And, it's very easy, Peter, to, you learn this through experience, to overmanage.
Yeah. And the timing of the market trying to move in and out, Chris, there's an institute that studies investor behavior. The Dalbar Institute has shown for, I think, the last 30 years or so of their annual survey that actually hurts and harms the overall return of many investors.
Yeah, and missing the best days of the market. Like, we had one here recently on a Friday. The market was very, very strong after the debt deal. And, my goodness, if you missed all of that, and then you're like, all right, is it time to get back in? That's why it's so hard to try to time the market, and you had mentioned that at the beginning of the show, great market timers. There's not very many of them because, things happen so very quickly. And that's why you choose a nice diversified portfolio. In 2022, bonds were underperforming. They were losing value only if you sold them. Okay. mean, they're still paying interest. You could be using that interest to buy bonds that are down in value. And when the interest rate cycle is done, bonds have had a nice recovery in 2023. So, sitting in cash that's doing nothing it really is not an investment philosophy that many people adhere to, for long-term success.
Chris, do you come across instances where people have an overabundance of cash, both in bank and savings accounts, or even contained right within like retirement and investment accounts?
Without question, I may have a client with $100,000 in cash, and nothing I say to them is going to make them do anything different. Now, in today's interest rate world, they might buy a 3 or a 6 month or even a 12-month CD, or, a 2 or 3 year fixed annuity to generate a decent return, but heck, we haven't had any of that previously. And, a lot of folks just have a higher comfort level of cash right now than, probably what we had, prior to COVID, let's say, right? COVID kind of changed everything. Everybody wanted to get cash heavy in case, we were all going to die. I say that jokingly, obviously.
Yeah, well, I mean, it was a unprecedented time, a scary time, and I think that's the gut reaction. But then, Chris, life went on in society, and the market rebounded substantially. Had we gone to cash, that may have prevented some gains or even locked in losses. I want to ask you about a specific strategy and a comment on it that I heard, because I've heard about stop losses and how they can be beneficial in kind of limiting downside. But I've also heard a retort that stop losses equal stop gains as well. And you just made the comment that missing the best days can really be impactful, but oftentimes they happen after some of the worst. What is your thought on stop losses in a stock portfolio? Good, bad, and different, pros, cons, disadvantages, both sides of it.
Well, stop losses, if you're paying attention and you can react every single day at every single moment to know when to jump back in, and obviously not many people have that ability. Like you say, usually if the market has one of its worst days, it's not long after that it has one of its best days. Okay? And you don't want to be out of that. And also with a stop loss is that, if you get into a market frenzy and everybody's running for the exits, it turns into a market order. So there's no guarantee it's executing at the price you want it to execute at.
Well, there are so many different strategies out there, Chris, and I know that you have access to the full spectrum of the financial world. Help people really drill down on their current situation as well as define their goals, and then weigh the pros, cons, disadvantages of each and every strategy to figure out what is going to be the most appropriate to help their money work to achieve those goals. And that's the game plan for retirement planning process, ladies and gentlemen. If you'd like to take advantage, have a conversation with Chris, or just find out more, pick up the phone and give a call, 800-868-1194. That's 800-868-1194. Or you can visit online, McIntireRetirementServices.com, McIntireRetirementServices.com. And Chris, I know that you also really try to coordinate the financial side of the planning with tax implications and legal implications and planning as well.
Yes. Yep. We can assist in estate planning, income tax planning, long-term care planning, kind of the full spectrum there, healthcare and all of that. So, we've got a number of great resources. We've got good infrastructure to help support all of that as well. So, make sure you give Heidi a call here, folks.
800-868-1194. That's 800-868-1194, or visit online, McIntireRetirementServices.com. Chris covered a lot of ground today, a number of issues, and I appreciate your input as always on all of it.
Hey, my pleasure. Thanks for listening, everybody. Have a great weekend. Be safe out there. Thank you.
Tune into Chris McIntire's full radio program and visit McIntireRetirementServices.com for many additional valuable resources, including other great episodes of Game Plan for Retirement with Chris McIntyre. Be sure to subscribe.
The content of this radio show is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. You are encouraged to seek investment, tax, or legal advice from an independent professional advisor. Any investments and/or investment strategies mentioned involve risk, including the possible loss of principal. Advisory services offered through Brookstone Capital Management, a registered investment advisor.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.